All right, guys. So we're going to talk about a little bit of a macro rebalance here on Bitcoin and potentially the kind of markets overall. As you see today, crypto is getting a nice bounce as tech is really just selling off, right? Tech's been in the bubble here for a long time. And, you know, not that this little bit of a sell-off is huge on NVIDIA, but the potential for this to become much bigger is there. And if they're going to rotate somewhere out of an asset that's overblown in tech in general, I mean, NVIDIA's up 1,200% since December of 22. And I mean, this year alone, it's up about 250%, right? And there are companies out there in the tech market that have been driven by AI that are up much bigger than even NVIDIA. And I'm talking like, look at SanDisk here. This is insane. This is quite literally the August 25 low. And several months later, just months, it's up 500%, right? This is all driven by AI demand. And people are going to start to take profits on this. They're not just going to sit in these things and not look for corrections, because markets just don't go straight up forever. They correct and people take profits, and those profits rotate into other assets. If one of these assets category right now is quite literally oversold to the gills, it's crypto and Bitcoin. Now, if we take a look at the macro area on Bitcoin itself, I know this chart's getting a little bit of a clusterfuck here, but this fair value gap on the weekly chart has been quite literally tapped into beautifully on Bitcoin, right? The reaction here needs to be strong. It needs to quite literally start pushing up and over these 1 hour, 4 hour daily resistance levels and start building liquidity to the upside instead of fueling itself further to the downside. Because if we do start to come down, the next levels are much lower. You know, we have a slight demand zone in the 85, 86K area. Below that, you're going to have a drop straight to the quarter level theory about 75K. We have a weekly order block to back test late longs in the weekly block from September of 2024 at about 69 to 67K. And if we get below that, it's going to be a really hard drive straight through all this liquidity that's resting here, straight down to about 50K, right? That is the bear scenario. And if that bear scenario comes to light, I think there's probably going to be a little bit of a back test before that happens. And what we're looking for here is those institutional patterns of manipulation to trap traders into believing they're on the right side of the trade. And if we look at these things, currently there is really no pattern left from where we are. We're in a nice demand zone. We need to hold right here. Coming straight down is going to leave too much fuel in the market to move it down any further with any more speed. Okay, so if I'm just simply looking at what I'm seeing here, you know, I'm looking for some sort of manipulation pattern, right? And the manipulation pattern would probably look like this: a big drawn out M pattern or shoulder head shoulder pattern to the downside if we are going to go for lower liquidity, if we're going for that 75K, if we're going for that 68K, if we're going for that $50,000, right? We need to see something form like this, right? And then we have a weekly structure shift, and it burns us. It burns every single person in the market, and it just continues into a bear market. And at this point in time, if that happens, people are getting unwound. Companies are unwinding. Sailors probably collapsing, and things of that nature are happening. And the call for crypto to be a main asset included in the S&P 500 and being its own entity and standing on its own 2 feet, that dream probably dies till the next cycle once again, right? So now is the time to start building up some sort of levels to the upside, and that's kind of what I'm going to cover today in the video for the crew. I'm also live on TikTok for some of this, just to kind of share what we do daily in the Discord. If you're looking to join and you're watching over on TikTok, just hit the link in the bio here. I'll give you a free 30-day pass if you've never had one before into the premium crew, and just open a ticket in the Discord in the bottom of the section. So the last thing we were watching really on Bitcoin was, you know, the fade past this weekly daily trend line, right? Let's get back in here. So we had this trend line and this trend line. So fractal 1 was complete at about 93K. We've come a little bit lower into that fair value gap on the weekly. We've closed that up nicely. And if we keep coming down, we talked about those potential levels. So with that fair value gap closed, I'm trying to build some sort of institutional pattern with an excuse to move to the upside now, right? So if we look at the last couple days here, the last couple weeks, we had about 14 days, 4 hours of accumulation pattern and a dump, right? If we're going to get ourselves out of this hole, I'm looking for a very similar time horizon of about another 14 days to get up and over, right? So I have what I drawn on here on these yellow market structure lines. They kind of start out with what I think is going to happen. So the last bull flag or bear flag move to the downside, I mean, this was hit, right? This was hit. If we come back down to these levels and we close another daily candle below that 88.5, I think it just rolls over and dies, and we invalidate some of this to start over a little lower. So I'm going to go ahead and get rid of this now. You can see this bar here for about 341 hour bars, or about 14 and a half days. And we're looking for that change in structure. We're looking for the change in state of delivery of the order flow to start moving us to the upside. So we have this real tight liquidity curve right now. Maybe I'll go into the 2 hour chart so I can squish this up a little bit for the weird TikTok angles. So we had a bottom that started to form. We had one more manipulation here, pushing everybody who longed these twice right back out of the market and stomped, right? So at this point in time, we do have a previous auction house sitting right here against this liquidity curve, right? This is the one we have to get up and over to start this whole fundamental change in order flow. It has to start with this level. So getting over this curve with an hour close, a 4 hour close, a daily close is the key to moving higher here. This is key one for the change in state delivery of the price action. We want to move order flow up. We want to start targeting areas of liquidity on the chart to the upside to fuel us for higher. That's what we want to do. So if we cannot get up and over this level today, tomorrow, and Friday, potentially we just roll over and price action just dies. A very fast invalidation of this whole entire plan. Okay. If we can get over that, we have to break this key level one here. So key level at 96,557 there. What will this do? What will this form up in price action? This will codify the institutional pattern of that shoulder, head, shoulder accumulation, the fake out, and then the distribution to the upside. And now measure move on something like this is pretty simple and pretty straightforward. It's quite literally the top of the distribution to the bottom of it, and that was going to get us another key level. If this pattern can form, it does give us a measured move to soak up all the liquidity we put into the upside back into all of this. It gets soaked right back up into the daily resistance. So you end up breaking a key level that looks like this, right? I have it drawn close here because I think that's the key we need to break. But this sweep to the liquidity upside could take us all the way back up into that $108,000 zone. And that's going to put in a new, larger time frame pattern on the weekly chart that could make a decision into Christmas, into the new year, of what we're going to do in early December, right? So that pattern I'm looking to form becomes out of that little 1 hour pattern here, and it needs to form into something much larger, into a 4 hour pattern. So we had this local pull that looks like this from here to here, right? From here to here. Then we form a larger pattern. So that larger pattern is going to do the same thing. It's a head and shoulder pattern, an institutional pattern that forms just like this. So that little 1 hour one we pointed out right here is going to turn into a much larger 4 hour daily and a weekly pattern. So that 4 hour and weekly pattern, that's going to give us a larger measured move. Now this weekly pattern, if it does not break up and it fakes, it's going to drive the market much lower. And I mean lower. I mean 75K. I mean 86K. I mean potentially 50K lower, right? So if we just go into the hour chart where I had these fractals drawn, can I see this on the 2? Let's see if I can fix this. So let's just change this to current intervals and above. So I should be able to see this now on something higher. Here we go. So here's the 4 hour, right? So this pattern, if we can pull it all the way back up and break, some of these levels are still hidden, right? So key level one was that 90, or key level one is currently right now where we are, that 94.5K. Key level 2 is that 96.5K. And then key level 3 is going to be that daily time frame, wherever we run into this, about 100 to 102K. And we want to form out that institutional pattern to the upside, right? So instead of this little measured move and then this little measured move, we get a much larger institutional pattern of this is the manipulation and this is the measured move, right? This could be the key, the gatekeeping key to bring us back up into all-time highs if this pattern forms, right? This is a very big make or break moment for price action in crypto and Bitcoin in particularly. And what I mean by that, it's huge. It's undeniably the biggest level that we will have to push through. This would be the failure of the head and shoulders pattern on a weekly, daily level, or the continuation of the head and shoulders pattern on a weekly, daily level. If this breaks down, the measured move is quite simply the opposite. It's that weekly breakdown out of the bottom, and it's targeting this order block on the weekly chart at about 68K. This is an undeniable level. If I go out to the weekly, this is the shift in structure we had on the weekly. This would stomp out all the late longs in the market that took the shift break on the weekly chart, right? This would be simply a RIM-C event. This would be a range initiation. Here's your range initiation. Your mitigation phase would come back all the way down into the 68K block, which is this little candle right here. It would stomp out all the late longs that took the weekly break and potentially a continuation for there. If that level is lost on the weekly with a close below it, we're looking at 50K and potentially letting any kind of trap traders here on the short side that held the whole pump the whole way up. And you know for a fact there is people there. So if we just zoom out real quick into, or excuse me, we got to zoom in here, back into the 4 hour. The reason this pattern is so important, this is the most resting liquidity in the market on the weekly chart. You know, we had this daily, weekly break of structure, 4 hour break of structure, 1 hour break of structure, 12 hour break of structure, 2 day break of structure. It's all sitting right here. This was the decision in the market to move below fractal and push price action much, much, much lower. Okay. So if we do get back up in this and this head and shoulder pattern fails with a double top, it just drags us down. So that is very, very, very important. So time horizons here could be just simply timed mechanics. I mean, the next 14 days, if we're up in here in the next week or two, we know we can potentially be up here in the next week or two after that. Okay, so very, very important that we're watching these levels and seeing the reactions they give. I mean, locally here, you know, New York is kind of just struggling to get over this. You know, there's potential here that we can just back test one of these trend lines and then continue up and over, which is what really needs to happen. Everything's kind of just getting a bounce here in crypto. Ondo's up 3%, XRP's up, Sol's up 6%, AVAX is up, Hype is up a lot. It's already broken up. Ooh, it's coming back a little bit already. But it already hit $41 for the day. I mean, BNB, Morpheus Labs, the top contenders in crypto are getting a bounce, and even these illiquid shitcoins are all getting a bounce too. I'm not screaming at everybody to long right now, but these are the things that I'm considering if we are going to change some sort of market structure to the upside, to have the Bitcoin price action put in a bottom and then simply start putting in higher lows. So at some point, even hopefully today, this is the first higher low we put in, and then we put another higher low, and then we put another higher low, and then we put another higher low, and then we just kind of keep moving up and over and holding these higher lows on higher time frames, the 1 hour, the 4 hour, things of that nature. Now, if we're looking for, you know, why I have things drawn like this, I'm sorry, I got to get rid of that. There we go. Now we can see a little better. Now, if you're looking for why I draw these fractals the way I do, it's because I'm looking for short scalp opportunities off of high time liquidity zones into back test zones, into continuation zones, right? So we know for a fact that if the Bitcoin price action comes up to this very key level where there's all sorts of resting liquidity currently sitting in the market, we're going to get a reaction here, right? You can't just hit these zones and not have a reaction. And if we don't have a reaction here, that is actually a key to tell me that we are short squeezing to the upside and potentially coming right back down. We want sound market structure. We want sound back tests the whole way through all of these levels, right? So if we come up, I'm looking for potentially a short scalp into the back test of this current break of structure that we could be attempting to put in right now, right? So I want to put in the high. I want to short scalp it into the previous resistance. So currently resistance, 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 resistance. If we break through this, I want to backtest resistance in the support and then continue this with a next break of structure showing us that price action wants to come up and break out and over, right? If we turn and then we get a 4-hour candle close above this level, a 1-hour candle close above this level, a daily candle close above this level, that is the key to me that, hey, look, we're probably changing the order flow. It's going to continue to the upside, and it's going to keep pushing up until it shifts structure down again. Now, don't get caught up in just that 1-hour chart, that 4-hour chart, because if we get to a higher level, we have a 4-hour fractal high here, a daily fractal high here. If we get to these levels, we're looking for short scalps again, right? We get to the top at about 100K. This is a very key psychological level. This was resistance, 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 or excuse me, support, support, support. It could be now short time resistance. You could be looking for a larger pullback on a 4-hour chart into a 4-hour demand zone, right? It could look something like this. This could be the break of structure on the 1-hour, the back test into the 4-hour demand zone, and then the continuation to the upside. The key here would be not to break the new 4-hour, the new daily low that we put in. We would be looking for, some sort of demand zone between the current high, the break of structure, and the back test. We want to build demand. And usually that would stomp out the late longs, like on the hour chart, the 2-hour chart, potentially even the 4-hour chart, and then we backtest into the daily chart. Things of that nature happen all the time. So we want to make sure that we are following larger time frame if we start to get those backtests successfully. At some point in time, we will put a more stable liquidity curve in off the bottom, and it could be something like this, right? So you can see this is a very similar, like 45, 35 degree angle that, is the same type of thing that we rode downhill on, right? So we want to start there. We need a 2-tap trend that's not a straight up, 70 degree angle. Now, the key there would be getting up into this weekly resistance zone, the weekly liquidity zone, and hopefully that larger weekly pattern does not fail here. This is exactly what happened in the previous bear market. Let's see if we can actually go back and look at that. Let me just find an older chart here. Right. So this is the kind of thing we don't want to happen. So we don't want to have, this current break of structure. We come down into the demand zone on the weekly, like we just did, fill the fair value gap like we just did, and we get the back test coming up, and it just puts in that next shoulder, right? So you had this kind of thing starting all the whole way down, and it puts in a lower high on the weekly, right? So we don't want to do that. So weekly resistance here, or weekly high, is currently the top of range. So a theoretical hold of the weekly bottom at 74K, finding a new higher low at the 89K we just put in, filling this back test on the fair value gap, back testing this break of structure, weekly high theoretically just could come back all the way to all-time highs, right? What we'd be looking for on this weekly would be something like this, right? So here, let's just draw it like this. So here's weekly, here's lower high, and then we bounce. Let's do it like this, right? So here's the fractal that we just drew. The thing we don't want to do on the weekly chart is come all the way up, get caught in that higher time excess supply zone, and that's just a back test to fuel us for lower, right? So that's what we don't want to do. And that back test is currently sitting right here at that 108 to 109K zone, right? So if we were going to come up, the thing we're looking to fuel is straight through. It's here as well. Is this fair value gap on the weekly, right? This is what we want to bust through. We want to fill this imbalance. We want to back test it just slightly, and then we want to take off through it. We do not want to fill this and then turn around and dump. It's the same thing we just did over here on the weekly, we filled the imbalance on the chart. I don't know if you TikTok guys can see that, but we've filled the imbalance on the chart here. And now we have a very large weekly imbalance at the top here as well. Right? That's really the only one that we have to fill. There is, you know, a very small one here, not worth noting on the weekly. There isn't one here. And then we have this massive one, right? Just this massive one on the weekly. And if we get up into this, I'm of the opinion that we just fuel this straight up and over, right? And everything that we've been building, you know, the TradeFi guys moving into the space, into the category, they just simply, they win, right? The BlackRock wins. They've got, you know, all those large banking institutional players that are in the TradeFi space. They come into crypto, they take it over, and we all ride the coattails of the whales in the market once again. You know, it's kind of the antithesis of what we wanted to happen in crypto. This was supposed to be for the people. But the matter of fact is if we can't get these larger players, these institutions on board in a way that they can invest, they simply just don't give a fuck, and we don't go anywhere anyways. They just fight against us. So this is kind of my plan right now. If this simply just fizzles out, like right here, which I don't think it's going to, if it just fizzles out right here and comes lower, just know that this is going to be punishing. You know, if we just come lower and we break this double bottom and we come the whole way through and out, it's going to be a very punishing move immediately into that 85K range. Okay. But I think this is good for fuel for hire. I think this macro range is what's really going to work in our favor here. And my Discord guys, if you're seeing this video in my channel and my VIP channel, for you TikTok guys, this is kind of what we do on a daily basis. There's me in fencing last night. But we've got lots of guys over here we got Ben, we got me, we got Eddie, we got Brian. These guys are people who trade for a living. The link for Discord is in the description of our TikTok channel there. I'll give you a free 30 days if you just scroll down here, open a ticket, and ask for it. Here is... it's down here somewhere. Tickets. Need support. Right here, under support services. You just go in here, you open a new ticket, ask for the free 30 days, and I'll get you the link to get you started on that. We're doing that for the holidays here. I'm not giving any, and I'll know because your Discord will already be connected to our payment gateway. I can't do it twice for you. If you've been through it once already, you got to pay for the second time around. But we trade New York live every single day. I'm going to stop this video here so I'm not just shilling my own guys.